Hello and welcome from Trend Signal for a review of the data and events the week beginning the 18th of May. The week starts with mixed markets overnight in the Far East on Monday morning. Chinese house prices fell 6.1% from a year earlier, which really sort of set the tone. But calming bond markets, which started a positive move last Thursday and Friday, a very positive move on the Treasuries, Bund and Gilts. So a slip in the euro first thing on Monday morning has helped equities, notably the DAX, which has firmed from its earlier lows. Last week, equities sort of struggled, certainly the European equities, the likes of the FTSE and the DAX. DAX gave up over 2% last week as the euro firmed. However, the US indices did okay on really, as opposed to the strengthening euro, which negatively impacted the DAX. The weakening dollar has helped the Dow and S&Ps to a certain extent, with views about the timing of the next Fed rate rise starting to diminish a little bit, certainly from the June time when they're expected to have rates rising. So that's all helping the US indices. In fact, the Standard & Poor's 500 just about clawed up to a record-breaking high on Friday night. So, but nothing too dramatic in its move. Nevertheless, it was a positive move. US indices, as I said, especially the DAX, are depressed by the strengthening euro. Sterling continued its post-election bounce, really, as just goes to show you the extent of the shorts out there in sterling. And sterling comfortably took out this year's high against the dollar, although it hit some fairly key resistance around the 157.70 level. Let's have a look at the data and events coming out and focus on that. It's a week of heavy data, really. You'll note that we do actually have a bank holiday in Canada on Monday, but really it's dominated this week by inflation data out in the UK, US and Canada. We've got a couple of German surveys. We've got minutes from the FOMC and from our own MPC and the Reserve Bank of Australia, and lots of central bankers talking and manufacturing data to boot. So let's just have a look at the key events. I mentioned the first one being inflation data. That's coming out tomorrow on Tuesday, that is. UK CPI or inflation data. Lots of reports in various Sunday newspapers talking about deflation, but I don't think that's on the cards, although technically we could see this number fall below 0%, obviously, which would be a negative price inflation, which is deflation, but we don't expect that to last for too long. But the consensus is for a flat reading in line with the previous week. We then have the ZEW Economic Sentiment Survey, which is the first of two surveys this week. This is the survey of investors and analysts, and you can see that we've actually penciling in a consensus of pullback from the previous month as the effects of the stronger euro start to take its toll. We then have on Wednesday, I'm jumping through some of the announcements, but just focusing on the core ones. The Monetary Policy Committee minutes from the last meeting, which actually, due to the election, was delayed until last week, but we're not expecting any surprises there. Sometimes we get a little bit of a surprise on the announcement or the voting intentions, but we don't expect anything there from the MPC on Wednesday. Then in the evening, we got the Federal Open Market Committee from the US Central Bank, the Federal Reserve, the minutes from their meeting. That is the real important announcement of the week. To get an insight into exactly what the Fed are thinking. Will they raise rates on in June or won't they? It seems like the data has not been positive enough. We had some fairly weak retail sales, and most critically, consumer sentiment dropped alarmingly from data published on Friday last week, falling to a 6-month low. So it's probably going to be pushed back, but those minutes will be very, very important for all. Then we have a bunch of manufacturing PMI data out in China and in Europe. Our own retail sales at 9:30 on Thursday morning will be of interest. And then we have the manufacturing data from the Philadelphia district in the United States. Picking up a little bit, 8.3 versus 7.5 the previous month. So it'll be reasonably positive if that turns out that way. Then we have our second survey, the EFO Climate, Business Climate Survey, which is a very broad-ranging survey. That's not so positive as well, although just a slight pullback from the previous month. Then we've got a plethora of central bankers talking on Friday. Mark Carney talking, our own governor of the Bank of England. We've got more inflation data out from Canada and in the US, CPI data that is. Draghi and Kuroda, the governor of the Bank of Japan, also talking. So all in all, quite a lot to grasp, but laid out quite nicely in the calendar from Forex Factory. Let's see if the bond markets continue to stabilize and see where the euro goes. Any tick up in inflation from the US could see that dollar recover some of the lost ground from last week. That's it. Thank you very much for listening. Bye for now.